Again, hello, and welcome to the December edition of the Corporate ESG Podcast, the podcast in which we spend 5 minutes exploring key ESG trends that shape the market. I'm Dan Bressler from the Climate and ESG Capital Markets team. And for the December version, we'll be looking at the year ahead. While there are a myriad of topics that will be important in 2023, from biodiversity to voluntary carbon markets to further ESG product innovation, today we'll talk about the emergence of transition finance. 2022 witnessed a number of transition finance developments, such as the FCA's Transition Plan Task Force Guidance and Toolkit, as well as the GFANZ's similar workstream. As a result, corporates, banks, and investors are considering the transition pathways of their investments and products. In November of this year, the UK Transition Plan Task Force, where NatWest is involved in both the steering and delivery groups, issued its disclosure framework and accompanying implementation guidance. Public consultation on this is open until the end of February, and a sandbox was also available for companies to help create their own transition plans. The disclosure framework focuses on concrete short-term actions that can be taken by companies, and the implementation guidance sets out the steps to develop a transition plan, as well as when, where, and how to disclose the plan. It recommends that organizations publish standalone transition plans at least every 3 years and sooner when there are significant changes to the plan, and that progress is reported against the Task Force for Climate-Related Financial Disclosures, or TCFD. The task force also announced that they plan to publish a range of sector guidance in 2023. This is on top of existing guidance from ICMA, which has been out since 2020 and seeks to provide clear and common expectations to capital markets participants on the practices, actions, and disclosures to be made available when raising funds in the debt markets for climate transition-related purposes. So where 2022 was the year of transition guidance, 2023 may be the year of implementation, where the role of transition finance will be defined across industries, especially in real estate and hard-to-abate sectors. Currently, for transition finance, both types of debt products are possible. Instruments can be sustainably linked or use of proceeds. But looking forward to 2023, transition plans will also need to be just. As highlighted during COP27, the idea of a green transition must go hand in hand with a just transition. We are already seeing investors demanding a clearer strategy from issuers on how to manage the social impact of their environmental strategies. We can expect to see further need of disclosure at a broader level than environmental parameters. In the corporate space, a higher share of renewables, more efficient homes, or energy efficiencies definitely provide part of the solution to the energy crisis. However, this is too often separated from social aspects. These will need to be considered at an issuer level and in conjunction with the implementation of energy transition and commitments. Transition is a theme that is likely to permeate both financial products and issuer disclosures, and the social may become the parameter to analyze those climate policies and transition plans. Thanks for listening to this month's Corporate ESG 5 and 5. I hope you find it useful. As always, please be sure to check out our monthly newsletter for more on key ESG trends shaping the market. And if you like this episode, please follow the channel and click on the notification bell so you get future episodes as soon as they're released. Thanks again, have a great new year, and see you next time.